This is my Smart Loan Officer podcast. Our goal is to keep you up to date with all the latest news and advices to buy your home and accomplish your financial goals. Today we're going to interview our founder David Gosselin, a loan officer with 23 years of experience. David, how are you doing?
Good morning, Healy. Thank you for your time this morning. Doing great.
Thank you for your time. How do you find yourself working from home?
You know, it is interesting. The key is to get into a good routine. But one of the positives from working from home is, you spend less money on gas. You have more time with the family to eat lunch and dinner, and you can actually service your clients better because it's a little bit more relaxed working from home. It's just assimilating to a good routine. So now I've done that, so it's good. And my clients love it because they'll hear my 3-year-old in the background sometimes. And, everyone's going through the same thing. So one of the interesting parts about this COVID virus is that more Americans are working from home, and that shows how resilient our economy is, even though we're going through a tough time, because it's great that we have the ability to work from home. I heard one of the managing directors from Goldman Sachs, 98% of Goldman Sachs employees are now working from home.
Whoa.
And he was just thrilled because, it shows how resilient Americans are, that, hey, we can still, work efficiently and work from home. So while it's not ideal, it's going pretty well.
Okay, so let's go deeper into today's situation. Is there any big challenge that customers are going through in regards to qualify for a loan?
There is. The toughest part is unemployment. And it's something you can't control if you're buying a home is, hopefully you will still have your job, right?
Mm-hmm.
Because you can only get approved for a mortgage if you are employed on the day of closing. So what I'm telling my clients is I'm going to help you look out for your earnest money deposit to make sure your loan commitment date is on the day of closing. That way, if you find out the day before closing that you don't have a job, you don't forfeit your earnest money deposit. Because now what we have to do as a lender, Peely, is we have to verify that you're still working on the day of closing, not up to 3 days before closing. So this is a unique challenge because, unemployment is growing every single day. So I tell my clients and say, hey, if you hear any rumblings, let me know, because I want to make sure we protect your earnest money deposit. So that is a challenge because, we want to make sure that they buy a home, and you don't want to hurt anyone's dreams because buying a home is very exciting. So I let my clients know, I say, hey, if you get laid off, it's not good, but it's not the end of the world because the economy will come back. But just kind of keep in the back of your head that if you don't have a job, so if you get a furlough, even a furlough, you cannot qualify for a mortgage loan. So I kind of tell them up front, like, hey, you have a job now, that's good, but let me tell you what happens if you're furloughed or if you're laid off, you cannot close on the loan. And what I also tell them, Peely, is like, even if you do lose a job, which is not good, don't fret too much, because under the stimulus package, you get state unemployment and then you get federal unemployment. And between the two, if someone makes $70,000 a year, you're almost going to get remuneration at about 85 to 90% of what you're making under the stimulus package. So I tell people that up front, like, hey, if it does happen, while not ideal, it's much better than getting unemployed 3 or 4 months ago, because there was no federal backstop for unemployment. It was a state unemployment at $275 a week. But with the federal backstop under the stimulus package, if you make about $70,000 a year, you're going to get about 85 to 90% of your total income. So that way you give someone some good news as they go through a tough time, if they happen to encounter it, that, hey, there's light at the end of the tunnel.
For the ones that can go through how are the times? Are they being affected, or is it going as usual?
For me, it's going as usual because I'm blessed. I have a great assistant in Sarah and a great processor in Amy. And so what we do in order to make sure everything goes smoothly is I disclose all of my mortgage loans, my clients on the phone, and I actually order the appraisal up front when I disclose a loan. because the appraisal process is actually the longest process. Typically takes about 10 days. So I've created a system where we get our loans closed in 30 days by disclosing, ordering appraisals. I have Sarah who works on conditions. Amy processes loans. She orders title, insurance. She goes back and forth with the underwriter. And then my underwriter works remotely from home, so she doesn't have to drive anywhere. So during this COVID virus, we all work from home and we all have daily meetings. We have Skype, so we're able to communicate effectively. So as a consumer, you're not negatively impacted. Additionally, on appraisals, the government has made some changes where they don't require interior inspections for a majority of appraisals. So we can drive by appraisals, which is great. On FHA, VA, conventional. So that really is helping out, because some people, under social distancing, they don't want the appraiser coming into the home, and now they don't have to on purchase transactions.
But what about then with home inspections?
Home inspections, it could be a little bit more tricky, right? Your realtor typically recommends the home inspector, or some of my consumers go online and they pick the home inspector. And everyone knows on a sale, you gotta have a home inspection. So typically it's not an issue, but it's going a little slower because some home inspectors are saying, you know what, we're gonna take a break during this COVID virus. But that's only a few. So for the most part, home inspections are going on just fine.
And for all the signatures and closing time, how do you handle that?
Well, so what's happening now is most title companies are working remotely from home. So what they're doing is that they're using a mobile notary service. Mm-hmm. That way, the mobile notary can go to your home and close the transaction, because a lot of people have kids. They don't feel like going to the title company because, kids, they put their hands everywhere.
Yeah.
So most of the title companies are utilizing mobile notaries to go to people's homes to close the transactions, which stays in guidelines of social distancing, but still allows the transaction to go through. So that's how we're handling that. And then with signatures, real estate contracts and mortgage disclosures are all e-signature, which is great. The only time where someone has to meet with the consumer for signatures is on the day of closing, and the mobile notary has been a tremendous help during this COVID crisis.
Seems like there is like a really good plan behind and very well executed in a short time and unexpected, right? I have a last question. There is a lot of people applying for SBA loans. Could that affect their credit score? Like, what advice would you give to those people?
You know what? For those people applying for SBA loans, I think it's great. The program that the government has approved on the stimulus package provides unique benefits. What I tell people is, before someone pulls your credit, try to get a reference of the person who's going to process your SBA loan. That way they know what they're doing, and you can know that before they pull your credit. Because what happens if they pull your credit and they're like, oh, you know what, Bob, we really can't handle this. Okay. Then you go to another place. And if people keep on pulling your credit report, then it lowers your credit score. So what I would advise you before you apply for the SBA loan is to talk to the person and say, hey, does your company have guidelines on the new SBA program under the stimulus package? Because I was listening to CNBC this morning, Chase came out and just said, hey, we don't really understand, all the guidelines, right? So if you have that conversation with the commercial loan officer, he can email you the guidelines, or even if he says, I don't know, I'll get back to you, ask that question up front first before your credit is pulled.
So, the thing that could most damage to them is when they request for the credit score status.
In my opinion, yes. Just go over it first, right? And then if the person inspires confidence, right, then you're going to feel comfortable allowing them to pull your credit. But if you're asking them questions, right? And one of the questions is, hey, I have a payroll of 6 people. If I keep everyone on payroll, will this loan be forgiven, right? There's a lot of questions you need to ask.
Yeah.
The person on the commercial loan officer side should have like a 1 or 2 page document that they can email you to go over the details before you even ask the question. That way you have the information, because the program under the stimulus package has never existed before. So you wouldn't know the questions to ask. So hopefully they have some education material to provide to you as a consumer before you give authorization to pull credit.
Well, thank you so much, David. This is for today, and we will bother you very soon.
Absolutely. And Pili, I appreciate your time today. It was a pleasure speaking with you.
Thank you so much.
Bye-bye.